Imagine everyone paid the same flat 10% in income tax. No brackets, no loopholes, number 70-page returns. The billionaire and the barista both keep 90 cents of every dollar. It sounds like a dream, more money in your pocket overnight. But what would it actually do to the country? The answer is way more surprising than everybody wins. And by the end, you'll see exactly who a flat 10% tax helps and who it quietly crushes. This isn't really about politics. It's about understanding how the money that runs everything, roads, schools, the military, Social Security, actually gets collected, and what happens when you change the one dial almost nobody understands. Most people have no idea how the U.S. tax system really works, which is exactly why slogans about it sound so good and the reality bites so hard. Let's start with how it works today. Here's the thing most people get wrong. The U.S. has a progressive tax system with 7 brackets. As of 2025, the top federal rate is 37%, but that only applies to income above roughly $626,000 for a single person. Not your whole income, just the dollars above that line. That's the key misunderstanding. There's a difference between your marginal rate and your effective rate. Marginal is the rate on your last dollar. Effective is the average you actually pay across all your income, and it's always lower. Someone in the 24% bracket might really pay an effective rate closer to 14 or 15% after the lower brackets and deductions. So when people hear taxes, they picture a giant single bite. Reality is a stack of slices, each taxed differently, and most people's true average is far lower than the scary top number. Now, what happens if we flatten all of it to a single 10%? First, the obvious upside. Almost everyone's paycheck gets bigger immediately, and taxes get radically simpler. A flat 10% could fit on a postcard. No accountants, no loopholes for the rich to exploit, no April panic. That simplicity is genuinely appealing. But here's the catch. The government currently collects trillions to pay for everything it does. Drop high earners from 37% to 10%, and you blow an enormous hole in revenue, potentially trillions of dollars a year gone. That money funds Social Security, Medicare, the military, roads, schools. You'd face brutal choices: slash those programs, pile on debt, or make up the difference somewhere else. And there's a hidden twist. A flat 10% sounds fair, but it can actually hit lower earners harder in real terms. To someone making $30,000, losing 10% means giving up rent or groceries. To someone making $30 million, 10% is pocket change they'd never feel. The same percentage, wildly different pain. That's the paradox flat tax slogans skip. Why do flat tax pitches sound so irresistible? A few mental traps. First, we hate complexity. The tax code is genuinely confusing, so just make it 10% feels like relief, and we'll trade a lot for simplicity, even things we shouldn't. Second, we focus on the paycheck, not the trade-off. Keep more of your money is concrete and immediate. Funding for the road you drive on is abstract and invisible. The brain grabs the concrete win and ignores the hidden cost. Third, we assume fair means equal. A flat rate feels fair because it's the same number for everyone. But the same percentage and the same impact are very different things when one person is rich and the other is barely making rent. This is why the flat tax debate never dies. There are real trade-offs on both sides, not a clean answer. Some countries have tried flat taxes and seen simpler systems and even economic boosts. Others struggled to fund public services. There's no free lunch. Lower rates mean more money in pockets and less money for everything the government does. That's not opinion, it's arithmetic. And here's the lesson that actually matters for you. Whatever the system, the people who win are the ones who understand it. The wealthy don't beat taxes by complaining. They learn the rules, use the legal tools, and plan around them. The tax code is a rule book, and most people never read it. Here's the twist that makes the whole flat tax debate even stranger. A lot of the wealthiest people in America already pay a lower effective rate than you might, completely legally, and it has nothing to do with brackets. Understanding how is one of the most useful money lessons there is. The secret is that the rich often don't earn income the way you do. A paycheck gets taxed at ordinary rates, but money made from investments held over a year, long-term capital gains, is taxed at a much lower rate, often 15 to 20%. So someone living off investments can legally pay a smaller percentage than a nurse or an electrician living off wages. The system taxes work harder than it taxes wealth. That's not a loophole. It's written right into the code. There's an even more powerful move the wealthy use. They borrow against their assets instead of selling them. If you sell stock, you owe tax. But if you borrow against that stock, a loan is an income. So there's no tax bill, and you still get cash to live on. Their wealth keeps compounding untouched while they spend borrowed money at low interest. Buy, borrow, die is the nickname for it, and it's perfectly legal. Now here's why this matters for the flat tax question. A flat 10% on income wouldn't even touch a lot of this, because so much top-end wealth isn't ordinary income in the first place. The slogan, "Everyone pays 10%, sounds like it targets the rich, but the rich largely don't live on the kind of income a flat tax hits. The people who'd feel a flat income tax most are wage earners, the exact group it's pitched to help. The takeaway isn't to be cynical. It's to learn the rules the wealthy already use. You can hold investments long-term for the lower rate. You can use tax-advantaged accounts that shelter growth entirely. The tax code rewards investors and patient owners over earners. And once you see that, you can start standing on the rewarded side of it. You can't set the tax rate, but you can stop overpaying within the system that exists. 3 legal moves regular people miss. Move 1. Use tax-advantaged accounts. Retirement accounts like a 401k or IRA let your money grow with tax breaks built in. This is the single biggest legal tax tool most people underuse, and it's available right now. No loopholes required. Move 2. Understand your real rate. Learn the difference between marginal and effective so you actually know what you pay and stop making decisions based on the scary top number. Knowledge alone saves money. Move 3. Keep good records and learn the deductions you qualify for. The people who pay the least aren't cheating. They're organized and informed. Every deduction or credit you miss is a tip you're leaving the government. The flat 10% world is a fantasy you don't control, but playing the real system well, that's available to you today. So let's bring it home. A flat 10% tax would fatten paychecks and kill the paperwork, but it could blow a multi-trillion-dollar hole in everything taxes pay for and quietly hit lower earners hardest. The real system is progressive. The 37% top rate only touches income above $626,000, and your effective rate is lower than you think. You can't set the rate, but you can use tax-advantaged accounts, know your real rate, and claim what you qualify for. Now I want to hear from you. Would you actually want a flat 10% tax, even knowing what it might cut? Make your case in the comments. I read every one. If this made taxes make sense, hit like, subscribe for a new What If breakdown every week, and share it with someone who dreads April. I'll see you in the next one.